Good afternoon. Getting right down to business here. We're doing it live and doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang. It's Mottek On Money, the voice of business news in Los Angeles, live on the air right here in 790 KBC, streaming live online worldwide at kbc.com. And yes, of course, the on-demand Mottek On Money podcast, kbc.com, Apple iTunes, YouTube, all of your favorite podcast platforms. Pretty good day on Wall Street today with the S&P 500 and NASDAQ popping to record highs this after an encouraging inflation report coming out of the box this morning left investors more confident that the Fed will be able to cut interest rates soon. Even Tom Looney mentioned it in his news report just a few moments ago. Optimism about this boosted stocks pretty much across the board. We did see the NASDAQ composite finishing at a record, the 19th time so far this year at a record high, closing up nearly 300 points at 21,682. The S&P 500 popped 72 points at 6,446. That index popping above, yep, you heard me, 6,400, 6,446 at the close. The Dow, meanwhile, up nearly 500 points at 44,459. It's still below the record high we saw last December. Inflation held steady in the month of July, even as the president's tariffs increases left their mark on some consumer prices. Consumer prices overall were up 2.7% in the month of July compared to a year earlier. According to the Labor Department, that was unchanged from June's reading, and that was below the 2.8% rise most economists were expecting. Fed officials now concerned earlier this year that large tariff increases could push up prices, stoking concerns about inflation. But those worries have not been put to rest, but cost pressures have diffused more broadly through supply chains so far. According to the Wall Street Journal, inflation remained sticky, though, in July, according to the report that came out today. We'll focus on inflation here in just a moment. Also, I'll talk about the ongoing L.A. rebuilding and focus on what's happening in downtown Los Angeles following a new study warning that downtown L.A. could lose up to $84 billion in economic value over the next decade if action isn't taken to support the commercial properties to the reuse of commercial properties to residential, among other things. Of course, the massive rebuilding effort continues in the Palisades, Malibu, and Altadena. I'll discuss all of that later this hour with Jerry Sullivan, National Managing Director of The Real Deal, the authoritative commercial real estate news site. We'll also be talking about what's happening on the overall economy. Dr. Christopher Thornberg, very recognizable name here, prominent Los Angeles economist. Dr. Christopher Thornberg, founding partner at Beacon Economics, will be speaking this Wednesday at the BizFed Institute Build Up LA series, focused on housing and energy. Will also be joining us live later this hour. But first, on your money, the markets, the economy, today's record-shattering performance on Wall Street, and the whole works now a giant on the business scene. One of the biggest names in the business world, Steve Forbes, chairman and editor-in-chief of Forbes Media, which includes Forbes magazine, former Republican presidential candidate, author of numerous books. His latest, the book Inflation, What It Is, Why It Is Bad, and How to Fix It. Steve Forbes, thank you very much for taking the call with us here this afternoon.
Good to be with you, Frank. Thank you very much.
Wonderful to have you with us. As always, give us your reaction to the reading on inflation and this pretty good rally we saw on Wall Street today.
Well, I think Wall Street's been waiting for the Federal Reserve to finally catch up to reality, and that is prosperity does not cause inflation. And I think the inflation numbers, when they start wiggling about 0.1% here, 0.2% there, seasonally adjusted, blah, 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 the case was there to let interest rates fall months ago. As you know, the Federal Reserve did its credibility no good when they cut rates before the election. The numbers today, inflation numbers today, are better than they were last year, and yet they haven't cut rates yet. So I think you're going to get a rate cut in September. The only question is, will it be 25 basis points or 50 basis points? But the Federal Reserve is way, way behind the curve, and it's setting itself up for a fall if the economy does not perform well.
President Trump, according to various reports, threatening the Fed chair with a major lawsuit demanding an interest rate cut. That would be interesting if that happens. What's your reaction to that news today?
Well, I think the president's got a vacancy, as we all know, on the Federal Reserve Board of Governors, and he's already announced his replacement, his nominee, and that is a man named Stephen Klein, who is the head of the Council of Economic Advisors. And I think that that is going to be very interesting when they have hearings next month on his nomination. And I think that's, if he's confirmed, which I think he will be, I think then you're going to see really Chairman Powell really lose a lot of power and credibility. Everyone will be looking at the new governor, and that's, in effect, Trump doesn't have to file a lawsuit. Replacing getting the new governor in, everyone knows that Powell's power will be declining. That's one other reason why I think you'll get a big rate cut in September. You already have two governors on record. They want lower rates. The couple of other governors have made noises about wanting lower rates. So I think we could get even a sizable rate cut in September.
What about inflation? You're the expert on it, having written the book, Inflation, What It Is, Why It Is Bad, and How to Fix It. Is inflation, in fact, under control at this point, and have the concerns about tariffs been overblown?
Well, I think in terms of the tariffs, I think we're going to feel the full effect of that in the months ahead. A lot of companies are doing what we saw back 3 years ago when we had the burst of inflation. For a while, companies like to do everything they can to avoid price rises because that does not make customers happy. And so far, they've eaten most of the tariffs now, but that is not going to continue. So I think you'll see some price pressures there. But the thing to remember is there's a very real difference between price rising because the dollar is weak. That's a traditional inflation. And the price is going up because of regulations or because of something like tariffs. The Federal Reserve can't do anything about tariffs. And so in terms of determining what they're going to do in interest rates, they should ignore what they can't control. They can control the value of the dollar. And I think that's something that's going to be pounded in on the Fed in the weeks ahead. And they can't do anything on when ports get clogged up and things like that, or you have an earthquake. So focus on what they can focus on, which is the value and integrity of the dollar. And so, yes, you're going to see some price volatility, but the Federal Reserve power to affect certain prices is non-existent. So focus on a stable dollar. I think that would also create pressures for really big rate reductions in the months ahead.
What are your thoughts about the latest move in gold and as some call it digital gold, Bitcoin and other cryptos, Bitcoin flirting with its all-time high again this past week, gold above 3,400, not too far off its record high above 3,500, which we saw earlier this year. We've seen big moves in other precious metals, including platinum, which is hovering at around 1,350, and silver has seen a pretty big run-up this year, just below $40 an ounce here. What is that telling us about the dollar and for that matter, inflation as well?
Well, what it says about monetary inflation is that it's a very real worry. And the Federal Reserve has not been paying attention to that. And the markets are indicating, you've mentioned what's happening with commodities, you mentioned what's happening with gold and then the crypto world. And that is all. And then you have the dollar weakening over the last few months against the euro and the yen. The yen, for example, Japan, which we think of as a stable country, their national debt is proportionally twice that of the United States. So when you have those currencies showing strength against the dollar, or the dollar more accurately weakening against those currencies, that means there's lack of faith and confidence in the dollar. And that bodes ill for the future, and that's why the Fed has got to get its act together and focus on stabilizing the value of the dollar. And when people have faith in the dollar again, I think that's going to create market pressures for even lower interest rates than what is being contemplated today.
Speaking on a day in which the S&P 500 and the NASDAQ both at all-time highs, largely propelled by the big tech names, and this AI frenzy, which continues. And NVIDIA looks like at or near an all-time high here today, above $183 a share. Apple has come to life, too, recently. Microsoft up more than 7 at 529. What are your thoughts about this big tech rally here and this ongoing rush to AI?
Well, the ongoing rush to AI is real. There will obviously be shakeouts. I'm old enough to remember great booms in the past. But even though you get inevitable shakeouts, especially among the smaller companies you see arising today, what's happening with AI is very, very real. What it's doing to productivity is beginning to have a very real impact. For example, in the whole world of pharmaceuticals, the ability of AI to take factors from numerous existing drugs and find zillions of ways to put them together to create new drugs to fight new diseases is something that just the potential is just beginning to be realized. That's going to have a profound effect on the physical health in this country. So the technology is real, and the U.S. is determined, fortunately, companies to stay ahead of it. And you have to admire the head of NVIDIA for his deftness in finding a way to be able to sell a certain kind of chip to China, which had been previously banned. And I think NVIDIA is trying to make sure that particular chip can't be used for militaristic purposes. So, Tim Cook at Apple has done yeoman's work in trying to make sure the intricate supply chains for Apple aren't disrupted. You know, they have a big presence in China, and when Cook indicated they're going to do more in India, he gets bashed for that. But he's learning to navigate the waters in Washington right now, and I think the market's relieved that Apple wasn't going to get slammed as much as they feared a few months ago.
On the air live with the one and only Steve Forbes, and regarding NVIDIA and AMD, also the other chip giant, they reportedly agreed this week to pay the U.S. government 15% of their revenue from sales of specific AI chips to China. What is your reaction to that remarkable part of the story?
I'm not sure that's going to actually hold up in the courts. I don't know who's going to challenge it. NVIDIA is quite happy to be able to sell the chip, so they're not going to complain with a 15% tax on it. But being able to impose that kind of a tax involving billions of dollars without congressional approval, I think that's a very big question mark. And that leads to something very interesting on the whole tariff question. As you know, the U.S. Court of Appeals has been listening to arguments about the constitutionality of President Trump's imposition of tariffs, taking them on and off, and what he's been doing since he got reelected. I think there's a very real chance the appeals court is going to rule against the administration. They're going to say, if you want those tariffs, you have to get them approved by Congress. That'll immediately, of course, go to the Supreme Court, and I wouldn't be surprised if the Supreme Court said, if you want those kinds of tariffs permanently, you have to do it through a congressional action. And then the ball will be thrown in Congress's court, and that's going to be a very, very big battle. So I think the uncertainty, unfortunately, about tariffs is going to be increased because the courts, I think, are going to disallow part or all of it. Just on
your line with Steve Forbes.
You got to go through Congress.
Very interesting aspect of all that, so thanks for taking that question. The other big story here that is being looked at here in Los Angeles very carefully, President Trump wants $1 billion from UCLA as the administration tries to stamp out anti-Semitism on various campuses across the country following those demonstrations over the past year. What is your reaction to that, and how do you think that effort is going?
Well, I think sadly, very sadly, because they're the crown jewels of the world, our universities. In the last generation or so, they've unfortunately gone very much to the extreme in terms of the environment they created, where you couldn't have real debate, where if you said things that weren't politically correct, you could be hounded and driven off campus and denied tenure and things like that. So I think the admonition that universities should adopt is very simple. Be what you once were, and that is open institutions for valid research, for the battle of ideas, and not the kind of almost authoritarian uniformity that we saw in too many of the campuses. So I'm not surprised various universities are going to be examined, and the idea that they could allow, in this day and age, anti-Semitism. We know that if, say, Black Americans were treated like that on a campus, the universities would have reacted. The fact that Jewish Americans weren't given that kind of protection is just astonishing. So people may have some beefs, you might say, with particular actions the administration is taking. But the universities, unfortunately, faltered in their basic mission. And my advice would be to them, take a hard look where you faltered, correct it, and move on.
On the air live with Steve Forbes, turning what's happening in your backyard in New York on that New York mayor's race, where the leading candidate is this socialist guy or flat out communist, according to what we've been hearing. What's the latest on that race there, and how do you expect that to play out?
Well, right now, Mamdani is the communist socialist. And the hypocrisy there is so big. You know, he was in Africa and was at a big resort and armed guards and everything. And then he has a rent-controlled apartment in New York City, which is supposed to be for middle, lower-income people. And I think right now he's ahead in the polls because most people really don't know what he stands for in terms of the police, in terms of education, and other issues. And I think that after Labor Day, you're going to see a lot of advertising run about his past positions, current positions. So I think his negatives, as they say, are going to go up, and that's going to be an opening for another candidate to create a real electoral race. Because right now, Mamdani is way ahead, but I think once people have real questions about his record and what he's really proposing for New York City, all you have to do is look at Chicago. With what that kind of program has done. It's wrecked that city, which is why the mayor there, his approval rating's about 8%, I think. And New York has to avoid that fate. And I think when people learn more about Mamdani, I think you're going to see the negatives rise, which will mean another candidate will emerge. Which one, I don't know yet, but another one will emerge from the three who are still on the ballot today.
A lot of friends came to this country from Cuba, and been a lot of talk about this lately, that some comparisons here with Mamdani to Fidel Castro, who also didn't, who charmed the heck out of people, and people believed his fairy tales, and when he took office, was undoubtedly a communist, and look at Cuba today.
Well, Mamdani is you just look at his statements. Whether you call him, he's an avowed socialist, but he's an extreme socialist. And fortunately, we still have a constitutional government in the United States, which sadly they didn't have in Cuba when Fidel Castro took over in his coup in 1959. And so I think that if he did get in, he could do, by executive action, considerable harm to the schools. He doesn't like schools that aren't on the thumb of the bureaucracy. He hates the police. He's now trying to say he really doesn't hate them, but he's made it very clear he's going to undo some of the programs that have reduced crime in New York City very sharply. So he can do a lot of harm. And now he wants to have city-run grocery stores. Well, we know where that leads. Bad food at high prices, or no food because no one's going to sell at a loss. So he's a real extremist, very clever, very, very articulate, knows how to handle himself in public. But I think as people learn more about him and what he has said numerous times in the past, I think his star is going to lose a lot of its luster.
Well, we'll keep an open line to you to get the word out about all this. Steve Forbes, again, thank you very, very much for taking the call here on all the big stories here today. Steve Forbes, Chairman, Editor-in-Chief of Forbes Media, which includes Forbes Magazine, author of numerous books. His latest, the book Inflation, What It Is, Why It Is Bad, and How to Fix It. Steve Forbes, thank you again for this honor, and it's always great to have you with us. Thank you very much for joining us live here this afternoon.
Good to be with you. Thank you very much.
Wonderful. Thank you very much. And out to the freeways we go now on 790 KABC. Mottek On Money continues, 790 KABC. Good afternoon. Big day for the stock market on the latest inflation reading, which came in tamer than expected. The NASDAQ has shot to another all-time high of 296.5 points at 21,682. The S&P 500, that broadly based index, also at a record high today of 72 points at the bell at 6,446. Cracking 6,400 for the first time. And the Dow also higher by nearly 500 points, up 483 at 44,459. The volatility index today pulling back 9%. We did see the price of gold hover around 3,400 today. Right now it's up around 3,403 here at the moment. The price of oil pulling back down to 6 cents at the moment at $63.11 a barrel. Cryptos have been all over the place lately, making a run for record highs. Bitcoin right now about 100 at 119,780. Ethereum, or ETH as it's known nowadays, down $43 to 4,576. That one hitting the highs we've seen this year. Doge at the moment at 24 cents. The yield in the 10-year note is back down to 4.29%. NVIDIA at or near all-time highs today, up another $1.04 at 183.10. Apple has been on a tear lately, up $2.47 at 229.45. I believe that's a new high for 2025. Microsoft at more than 7 at 529 and change. And silver, let's bring up silver here. Silver hovering just below $38 an ounce, and platinum at $1,351.10 an ounce. And now the latest news on 790 KBC.
Former U.S. Navy SEAL Sean Ryan captures real stories about sacrifice and strength.
Looking back, what would you tell your 10-year-old self?
Just hold on. The amount of times that this man is threatened to shoot me.
There's a saying, there's no atheist in a foxhole.
That's what I hear.
Uncovering truth with the heroes who live to tell it.
You had a guardian angel.
I did.
Why did you think that?
So many things happened that I just come out okay.
The Sean Ryan Show.
Go ahead, pull that trigger.
You ready?
I'm ready, brother.
Follow and listen on your favorite platform.
Welcome to NFL Flag.
Are you ready? Yeah! Are you ready? Yeah!
No matter who you are, lace up your cleats, smear on your eye black, step out on the field and chase something. Chase a goal.
Let's get it!
Chase the big time.
Get that, ladies!
Chase rings. Chase gold medals. Chase all of it. It's all up for grabs now. NFL Flag. Chase something. Visit NFLflag.com to find a league and start the chase today.
Mottek On Money continues, 790 KABC. Some breaking news in downtown Los Angeles today. Looks like Oceanwide Plaza, also known as Graffiti Towers, might have a buyer or two. Let's bring in the expert on all this, Jerry Sullivan, National Managing Director of The Real Deal, the authoritative commercial real estate news site. Jerry, thank you very much for taking the call here. Take it from the top and tell us about the news you're breaking here this afternoon.
Sure thing, and it's always a pleasure, Frank. Our senior editor on the West Coast, Lauren Schramm, broke the story today that Mark Tarczynski, who's a veteran broker, he's with Colliers, a longtime specialist in downtown properties. Mark's been handling this property and says there's a couple buyers, qualified, interested buyers, who have been whittled down from a list of 17 people who first expressed interest when this process started late last year, I believe. And so qualified in this case means you're going to need about $400 million to do the deal and probably another billion to $1.2 billion to complete the project. So you're looking at $1.5 billion on this. And apparently there's, according to Mark, one domestic party that's interested and one offshore. And so he said he expects a deal by year's end, and we'll keep an eye on it.
On there live with Jerry Sullivan, National Managing Director of The Real Deal. To remind our listeners, Oceanwide Plaza originally was a mega Chinese funded project in the heart of downtown Los Angeles, right across the street from what was Staples Center, now Crypto.com Arena. And then the project went bankrupt, and you got graffiti vandals there that have totally tagged those towers there, and it's completely sealed off. There's absolutely no construction going on there. And Jerry, we've been following this saga for quite some time. Every time I drive by there, I send you pictures. Nothing going on there. Just a total eyesore right in the heart of downtown Los Angeles. $1 billion project at a complete standstill here now. And there was a lot of talk, maybe this project, the whole thing may have to be torn down, given the fact that it's been years sitting out in the elements, out in the open and all that. Any indication of what the future of those towers might be under these reported bidders?
No, there's no indication that far. And I suppose, a tear down might still be, in somebody's plans. How that pencils out, I don't know. It would be expensive to tear down. There'd be a lot of material to salvage, that sort of stuff. But I got to believe a tear down would add a lot of cost. But as you said, it has been derelict for some time now. So yeah, I think there's going to be a lot of cost involved in resuming construction if you want to finish. So I think any way you cut it, this is a dicey project. I'm sure that if these two bidders do go forward, I'm sure they had better do their homework.
Did your correspondent name the bidders?
No, they're not identified at this point. As much as we have is one offshore and one domestic.
Got it. The focus in downtown continues here. There was a report put out by one of the groups associated with the Central City Association of Los Angeles, a new study warning that downtown LA could lose up to $84 billion in economic value over the next decade if action isn't taken, they say, to support the reuse of commercial properties, namely office to residential, among other things. What's your reaction to this report, and are we going to be seeing more conversions of unused office space to residential in the heart of downtown Los Angeles?
Yeah, the report makes perfect sense. An office building with no tenants is going to lose value. And by the way, that's happening as we speak. Tomorrow morning we'll have a story. One of our West Coast editors, Elena Boutros, broke a story about the Wedbush Center, which I'm sure you're familiar, faces the 110 freeway just as it cuts through downtown. And, that's taken an enormous haircut on its value, according to the latest documents released about it. And so that's happened. Now think of that. That's, a Class A building. Now think of all the Class B and C downtown. So what becomes of that? It loses value. The city gets less in the way of, or the city and county get less in the way of property tax revenue, and it doesn't stir the sort of sales tax revenue that a vibrant commercial district would. So it's a real downward kind of vicious cycle. That doesn't necessarily mean there's demand for residential, right? I think downtown has some work to do to make itself attractive as a residential center to that degree. I mean, you're talking about you would need to attract a lot more residents downtown. I know there's been significant increases in the residential population downtown in the past 2 decades, but you're talking about significantly more now, and in a tougher atmosphere with the problems of homelessness and some of the crime and everything else. So, a lot of challenges. I think the thing that no one's talking about, and it may come down to, is tear downs. It may be that some of these buildings just need to be, or will have to be, pulled down.
We can certainly do it here in Los Angeles. Look at Century City, a sparkling kind of a mini downtown Los Angeles area. And there are a few places in the world where they're building office towers, but Century City is one of them. They're just about to finish construction on a big office tower there on Avenue of the Stars, right there in the heart of that beautiful business district where occupancy is, nearly 100%, right, compared to Los Angeles. We did hear from Lou Horn, the giant here on the commercial real estate scene, the head of CBRE here in the Los Angeles area. He gave the keynote at the State of LA business event, which I had the honor of emceeing for the LA Area Chamber last week. And Lou Horn said downtown LA is on sale, and he sees things bottoming out there. What do you see there in downtown LA as far as the future of office, and especially compared to sparkling Century City?
Yeah, it is on sale. It's on sale at bargain rates. Downtown has been bumping along the bottom for more than a year now. There's Class A properties going for $130 a square foot, just maybe a fifth of what they were valued at before the pandemic. What do you do with it, right? So it's great to get a bargain, but what are you going to do with it? I'm not sure that downtown Los Angeles will ever need, again, as much office space as it has right now. So, that gets to conversions or the occasional tear down, maybe open up a little space and do some pocket parks or, something. But, that remains to be seen. There's been about a year that it's been on sale. So, the pickings, they're probably still there. There's some ripe stuff. But at some point, after a few years, being on sale, you better start then looking at the next step. And again, the next step is bargain basement.
All right. And briefly, Jerry, I wish we had more time, but on the reconstruction of the fire-ravaged areas, can you give us a quick update on how that is going from your vantage point?
Yeah, I mean, it's not going real well. I don't know that the city is, the city on the Palisades side specifically, the city's communications and their operations just, have not been all that impressive. I think we're starting to see some movement on land sales. And, I think you're starting to see some opportunists buying multiple lots. We had a story today about a foreign buyer, someone unidentified at this point, publicly undisclosed, a buyer who I think bought 9 lots in Malibu. And we forget Malibu also was affected by the fire. And so, we're starting to see that. Now, apparently, these were off-market deals, and the owners don't want to deal with building a new seawall and all the sort of things that environmental regs and everything else that go on with this. And this particular buyer figures it's a good bet and is willing to put that sort of work into it.
Got it.
And then develop, and I don't know how they'll subdivide, but, it's playing out, and I think it's going to play out on a market basis that way, and the city's going to have to catch up.
All right, Jerry, thank you very much for that thorough update as always, and for breaking the news here as well. Jerry Sullivan, National Managing Director of the Real Deal, the authoritative commercial real estate website. Jerry Sullivan, thank you very, very much for joining us live here on Mottek On Money on 790 KABC.
YouTube personality Benny Johnson has cracked the code on a new era of newsmaking.
And we have some major members of the White House team that will be joining the program. I know it makes you uncomfortable. It makes me uncomfortable. But ladies and gentlemen, sometimes you just got to dive right in and say, well.
It's a new cultural landscape.
This is the proper messaging. Thank you. Let's rock and roll.
The Benny Show. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KABC. Big day on Wall Street with the NASDAQ and the S&P 500 hitting record highs. Nervous time on Main Street, though, with the latest inflation reading coming in better than expected. But it looks like the core reading, that strips out food and energy, did see the biggest gain in 6 months. Inflation and tariffs, obviously a big worry right now. Let's bring in prominent Los Angeles economist Dr. Christopher Thornberg, founding partner at Beacon Economics, who will be speaking this Wednesday at the BizFed Institute Build Up LA series focused on housing and energy. Christopher Thornberg, wonderful to have you with us here. Good afternoon to you.
Great to be here, Frank. Nice to talk to you as always.
It's been a while since we chatted behind live microphones, so love to get your view of the big picture here on the Main Street Los Angeles economy, obviously with the firestorm recovery continuing, inflation and tariffs, of course, also in the picture. Give us your assessment of things here at the moment.
Well, I know there's a lot of scary news at the national level, as you said, the tariff situation and, of course, some fears about prices and whatnot. Surprisingly, the economy actually continues to truck forward at a fairly decent pace. We've got a good growth reading in the second quarter of the year, and despite those employment downgrades that made the Trump administration so upset, it turns out that every other indicator of labor market strength suggests that things are still in an even keel, which tells me that really the slow employment numbers we're seeing at the national level may be more of a problem with labor scarcity than, shall we say, a problem with falling labor demand. Now, when it comes to labor scarcity, there is no place in the country who is facing more of that than, of course, Los Angeles itself. And when you talk about labor scarcity, the fact that LA's labor supply is about 6% smaller than it was prior to the pandemic, well, guess what you can blame? And that, of course, is the absolute lack of new housing construction going on in this county relative to the needs. And it is that housing shortage that has and continues to be the greatest challenge we face. And it continues to hamstring our ability to grow this economy the way it could and should.
All right, we have a massive rebuilding effort underway in the Palisades, in Malibu, and Altadena. How do you see that process going at the moment, and at the pace of this, and what is the end product going to look like?
Well, it's way too slow, Frank. I mean, that's the problem, right? I mean, for all the promises about streamlining this, people are getting into the system and they're immediately confronting all the problems that everybody else faces, which is you get into the system and there's multiple departments. They don't seem to be playing by the same rule book, and you end up just bouncing around endlessly between, permit bureau and permit bureau and permit bureau. It can be an incredibly frustrating process, and for a lot of these people who do want to get their home rebuilt, obviously this can be nothing but just it's just got to be heartbreaking to deal with this kind of nonsense.
Absolutely, and we just talked about this report coming out of the Central City Association, warning that downtown LA could lose up to $84 billion in economic value over the next decade if they say action isn't taken to support the reuse of commercial properties, namely converting office space to residential as one solution to the housing shortage. What do you think should happen there in the downtown area?
Well, absolutely, but look, adaptive reuse can be helpful, but it has its basic limitations. As opposed to be thinking about, shall we say, adaptive reuse, we ought to be thinking about just making it easier and perhaps even incentivize the building of what I would call new apartment and condo towers. Look, we recently had a win at the state level when they reformed the CEQA rules. But look carefully in those reformation of the CEQA rules, and you'll find out that it only applies to buildings underneath a certain height, like 70 or 80 feet, which is about 7 stories. Well, if you really want to see a dense urban metropolis lean into housing, you know that what they do is they have to build a lot of tall housing complexes, things way over 7 stories. Go to any place like Vancouver, Canada, for example, or Toronto, Canada. You can see just building after building after building. And we haven't fixed that. We haven't actually lent into that process. So unfortunately, what you're seeing here is something that might be helpful, but it doesn't get at the root problem. The root problem is that it's almost impossible for somebody to go in and build a big apartment tower, given all the rules, regulations, and the costs involved.
Economist Dr. Christopher Thornberg, founding partner at Beacon Economics, who will be speaking, by the way, this Wednesday at the BizFed Institute Build Up LA series focused on housing and energy. We did speak to Kevin Harbour, the president of the BizFed Institute, about that. You're one of the headliners at that event in Culver City. People can get more information about that at the BizFed Institute website. Dr. Christopher Thornberg, let's do this more often. Thank you very much for taking the call live with us here this afternoon.
Great to be here with you, Frank. Anytime.
Thank you very, very much. And stay tuned now for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
Former U.S. Navy SEAL Sean Ryan captures real stories about sacrifice and strength.
My biggest fear wasn't death. My biggest fear was nobody will remember me.
That motivates a lot of people.
It just made me feel invincible.
Open the steel door and they were all convinced, I think, that they were about to die.
This rush of stress comes over me because now it's soul time.
All of a sudden I'm saying, what is really important?
Let us reveal the truth of ourselves.
That's it.
The Sean Ryan Show. Follow and listen on your favorite platform.